So we're talking tax legislation and possible outcomes for family business with Pat Soldano from Family Enterprise USA. And Pat has a survey, an annual survey of its members that is always fascinating. So Pat, what is top of mind for the families you surveyed this year?
Well, we asked them, and we usually ask this question, what are their top tax concerns? And this year, 2020, our annual survey revealed that income tax is at the very top of the list. 71% said it's their most important issue. Estate tax, 46%, came in a second. And next was capital gains at 20%. And the reason they don't add up to 100 is these are the top two boxes. Income tax, I think, is very important to family businesses because many of these businesses, as you know, operate through what's called a pass-through organization. That means that they're an S Corp or an LLC or an LP. So they're still paying this 30 to 35% income tax rate when corporate America, the regular corporations, get a 21% tax rate. So very important to them at the top of the list. And of course, estate tax is always important to them because as we know, family businesses are the only ones that pay estate tax, or families, individuals pay the estate tax, corporations don't pay the estate tax. So that's always an important issue as well. And then, of course, capital gains is next. In terms of their economic priorities, now this is a little different question. And again, we ask this question every year. At the top of this list, at 69%, was the estate tax. And a very close second was income tax at 67%. And then reducing regulation was a very close 66% third. Once again, these issues are always top of mind, very important for family businesses. And the reason, again, the percents don't add up is because, of course, they can choose more than one at the top of the list. Reducing regulation many times is at the top of the list, but it's either one of these three is usually number 1, 2, or 3. So that is what's important to family businesses in terms of their economic priorities. And we'll ask this question again in 2021, and it'll be very interesting to see what the responses are.
What's going on right now in terms of support for the pandemic and the shutdown of the economy or the partial shutdown of the economy? What's some assistance that's potentially happening right now or in the future?
Well, as you know, family businesses are very resilient and they plan their business as a legacy to their children, their families, their employees, and their community. So they've all adapted. I've been amazed at the stories that I've heard from family businesses. They've changed product, they've changed how they serve their customers, their clients. They, again, once again, are resilient. Many of them have delayed laying off employees. One family business that has been in business over 60 years, she, in fact, didn't want to lay off anyone, and until just a few weeks ago, hadn't laid anyone off, but ultimately had to do that. But most family businesses have been able to hold on, reorganize themselves. But in terms of the opportunities with legislation, I'm going to go through a few of those for you that are either in the proposed legislation or being discussed in Washington, D.C., and these are just some of them. So the Work Opportunity Credit, which really provides $5,000 for employers to hire what is a new category of COVID-19 workers that have been unemployed during the pandemic. Next is the cleaning tax credit. This is a tax credit, so it's 50% for qualified expenses. So that would be like workplace reconfiguration, tech expense. There is some limit on a cap on this credit, and there's some limits as to the size of the business in terms of the number of employees. The Restart Act, this provides small and medium-sized businesses with loans up to $12 million. This covers 6 months of payroll and benefits and operating costs. And some of this loan could be forgiven depending on the revenue of the business and certainly if there's a loss in the business. Then there's a general business acceleration credit. Since many businesses are going to experience a loss in 2020, we want them to be able to carry those losses forward. And that's really, really important, and hopefully that could happen. And then there is the deductibility of expenses paid with the PPP loan proceeds. Amazingly, in April of this year, the IRS said, we're not going to allow the expenses that were paid with PPP loans to be deductible against your taxes. Well, the Senate and the House don't agree with that, and they are trying to reverse that decision by the IRS. And last, there's a real estate proposal that would allow 5 years of deferral on the recognition of gain for debt forgiveness, which again could be very helpful to family businesses. So those are some of the provisions that are being discussed, very seriously discussed, and will probably be in COVID-19 legislation, either that could happen in the lame duck session, could even happen next week, but could happen in the lame duck session, or again in January of next year.
Well, Pat, thank you so much. A lot of detail there, a lot to chew on, but I know the family enterprises are incredibly resilient, typically have strong balance sheets, and know how to make adjustments for all types of things that come down the pipe. I really appreciate your time.
Thank you, Peter.